What's up, guys? How's it going? Just give me a sec. Sound good? Give me a sound check. Background noise, microphone, all that stuff. I'll get it started. Let me just get organized. Chat. Can you guys hear me nice and clearly? Just give me one sec. Hey, what's up? Sound is good. How's the background noise? It's not overwhelming, right? It's kind of just that. Just like ambient background noise. I don't know, I kind of like having that on the background. What's up, what's up, what's up? Philip, Keld, Farhan, Florimond, LPBB, Dario, Alex again, Jedi Hornet. Okay, cool. Just give everyone a minute. To be honest, it makes it clear. Cool. Yeah, I had so whatever, we'll get it started. What's going on, guys? So for anyone who's new, my name is Ryan, also known as Kennering Clark on Twitter, and this is the BlockRoots YouTube channel. If you're not a subscriber, you know as it goes. Hit the like button, hit the subscribe button, all of that. Just as a reminder and a heads up, none of this is to be taken as financial advice. This is strictly for entertainment purposes only. And yeah, so we're going to go over BTC. We're going to go over what has become popular in the last week, which is the Avalanche ecosystem. So I'll talk about some plays that I'm interested in there, some positions that I've actually accumulated there. And yeah, take questions, go over charts, do all that good stuff. So the sound is good. Went over all the important formalities in the beginning. One thing I do want to go over, and we reference them in every stream. They're our partners, so Phemex. We don't just share a ref link. They're actually our partners. We've been partners with them now for almost 2 years. They have a very special bonus that they are offering people that use our link. So, if you use a link in the description below, and as you can see there, when I switch the screen, you'll be able to see, if you use the link Phemex.trade, normally you'll get a trading bonus. You either will get a trading bonus or you will get, some type of reduction in fees. Standard taker fee across exchanges, unless you're trading on Coinbase, which is just like highway robbery. Standard taker fee is around 7.5 basis points. So for those of you that are not familiar with basis points, just 1/100%. So think of 7 basis points as 7% of 1%. All right. So that's normally what the taker fee is. And if you're using the link, if it's not a bonus, you'll get a reduction in that, which really adds up. As you guys saw my whole fiasco with Quant Tower last week, that $8,700,000 order, the taker fee from that alone was $13,800. Okay, and that was just pure taker fee. So that was round trip. That was entry and that was exit. Entry at market, exit at market. You guys know I didn't want to get in that position to begin with. Turned out to be a great position, right? If I held that long, I'd be up. I'd probably be up $1 million by now, if you think about it. So 8.7 million contract position. I forgot where exactly the low was, but it happened to be the low of this entire structure. So, screw me for not holding on to that accidental position. But the taker fee, the fee alone from that position to open and close it at the same exact spot was $13K. So everyone benefits from reduced fees. So the special that they're offering those of you that use our link right now is you could get up to $2,000 as a sign-up bonus. And you guys know I hate shilling shit, but they've given us this link. There's a time right now there, during this time. Let's just go over the actual promotion. During this time, there's a lot of uncertainty across exchanges. You have people offboarding Binance. You have, a ton of people going to exchanges like KuCoin right now because they don't have any kind of advanced KYC, and they offer you, they offer a more than a substantial amount of money that you could withdraw. I forgot what the exact limit is, but if you were on Binance, it went from 2 BTC down to, what was it, 0.06 BTC, and then now they don't allow you to be on the exchange whatsoever if you're not fully KYC'd. So this is the bonus right now on Phemex. Again, you have to use our link to gain access to it. Just to go over the details, because it's not, of course, it's not, hey, if you just go sign up to this exchange, they're gonna give you $2K. Obviously, it's tiered based on the amount of money that you're signing on to the exchange with. So if you're on an exchange right now and you have 1 Bitcoin, for example, and Bitcoin right now is trading at $49,000 last time I checked, right around 49,000. If you're going to deposit 1 BTC, they're going to give you $1,000. All right. There's no stipulations with that. There's no we're going to jerk you around for that $1,000. You deposit a BTC, you get $1,000 in your account. And you can see that the 2K that's for those of you who deposit over 2 BTC. So, it's not just, you use the link and you get 2K. All right. They wouldn't be able to stay afloat if they were just giving everyone 2,000. So yeah, that's that. Just wanted to go over that in the beginning. Again, like I said, you guys know we've been partners with them for over 2 years now. So when they do run a special, I like to highlight it. I don't like to get stuck going over, the partnerships for too long, because we don't even talk about, or I don't, excuse me, when I do the streams. I don't highlight BlockRoots too often. I should, but I don't know. It goes against, I don't like to. I don't know. It makes me feel weird to sell that shit. Excuse my language. All right. So let me just go through the chat really quickly. Say hi to everybody. And for those of you that are new and are unfamiliar with, when I say BlockRoots, my partner and I, so Josh Rager, we are the co-founders of BlockRoots. We have an entire market profile and order flow course. So for those of you that are constantly, writing me and saying, what charts are you looking at? Tell me about this. What am I looking at? How do I use that? We have an entire course dedicated to that. So if you go to www.blockroots.com, that's where you can gain access to that. Listen, it's $49 if you want to take the course, and peace out. We're not asking you to stick around, and we don't need your money. So, all right, I said hi to everybody. Besides, now we have James Christopher. What's going on? What's up, Horseman? Josh, what's up, buddy? Spaceman, what's up, pal? So, Spaceman, for those of you that are unfamiliar, Spaceman is the dude just puts out indicators on TradingView, and has more sophisticated indicators on TradingView put out in the last month than I want to say TradingView had put out in the last couple of years. He's been able to basically replicate a footprint chart on TradingView, replicate a market profile on TradingView. And listen, I use ExoCharts. He allows me to use his indicators. Use whatever you're comfortable with using. And don't get pissed off at anybody because they charge for something that they create, okay? That's the most annoying thing. When someone makes something and people talk shit online because they're charging fucking money for what they created, right? You know what? If you don't want to buy it, if you don't want to spend the money, don't fucking buy it, right? I'll just tell you though, from my experience, things in crypto markets are ridiculously cheap compared to their traditional market counterparts. We're talking about data feeds, we're talking about tools, all of this. The fact that the crypto market is young, I think, makes this possible. But you have all these kids, these bright minds. It's open access for the most part. Putting out every other day some new platform. Whether it's data analytics, whether it's indicators. It's amazing. So, okay. Yeah, Josh, the fees on Phemex are no different than any other exchange. The exception with Phemex is with Spot, you could just pay $19 a month and basically have no fees on Spot. I think it's 19, it might be 10, I don't know, it might be more than that, but you could subscribe to that feeless program. And if you're going to be trading frequently, that completely makes sense. All right. So the link, guys, for Phemex.trade for that 2K, that starts on Monday. So that's why you got to go on the website and see the promotion deal. Course is at www.blockroots.com. Yes, this is Clark. What's going on, Sam? All right. All good, man. What's up, Trader SZ? So Trader SZ, the range master. If you're not familiar with who he is, then you must live under a fucking rock, or it must be your first day here. All right, cool. So we'll take a look at BTC. We'll go over some AVAX, some Avalanche ecosystem plays. You guys know what my area of competence is. It is not it is not fundamental analysis. It is not like picking out the best gems under the rocks before everyone else can. But I definitely am adept at identifying when the narrative is shifting, when there's sort of a ecosystem rotation taking place. And honestly, if you're following the right people on Twitter, it's not very difficult to do so. I tweeted this morning about basically finding good people to copy. And don't take this as, you should be copying other people's trades. What I'm talking about is finding a good list, so a very curated list, and outsourcing your brain power. I know that I follow 10 people, right? I can just think off the top of my head that are just absolute killers when it comes to finding these alt plays. Okay, that's not my area of competence, but I know that they're very good at it. So I basically, like I said, outsource all of my brain power to them. And you're essentially, these people are working for you, right? I mean, for free. So, okay. All right. So we'll take a look at BTC. Balanced day so far. I will, hold on a sec, just going through the chat. Yes, this is Clark. I think I said that already. All right. Let's get this up. Alert. Okay. So just in terms of the higher time frame really quickly, not something I like to drown on too much about because it's kind of obvious at this point. You have everybody on Twitter talking about it. I TP'd some last night. All right. It's kind of mechanical of me to do this. It's sometimes it works out to my detriment. most of the time it works out to my benefit. It's not always that I get to sell the high, but in the long run, right, taking profit at higher time frame resistance for me is just a better idea. So when I said last night, okay, I'm TPing some here, that is, being able to do that requires discipline. Sometimes I buy resistance, most of the time I sell it. So where we're sitting right now, depending on if you're looking at it on the weekly chart, on the daily chart, we've been talking about this level for a really long time. We definitely came back to it differently. So if we had some type of very quick mean reversion bounce up to this level, I would say that I'd be more apt to fade it from the outright rather than thinking about the bullish case. But, as I've said in the last couple of streams, we ranged for a really long period of time. The resolution was to the upside. We've built significant structures on the way up. It's not like we've had, a one-way trip that was a gap. So, we're talking about an inefficient move on the way up. So this has been a strong move and it's been spot led, but we're at higher time frame resistance. And we're at higher time frame resistance. We have some signs of futures trading at a premium to spot. So what I mean by that is, if you're looking at Bybit and if you're looking at Coinbase, what you'll notice in the last 12 to 24 hours is that sometimes a premium, which was rather a discount for the last, I think, month, has been around $100. So it's kind of smoothed out right now, but we're into higher time frame resistance. This is when I'm going to be paying attention to positioning, see who's doing, let's just say, the carrying, right? Carrying the weight. And what we're seeing is just futures are starting to chomp on the bit a little bit more. So at a major structure, at a major contextual zone, I think 50 is a very important number. All right, it's a sort of key psychological number, big round number, stands out, high participation zone, whatever you want to call it, inflection point, yada, yada, yada. I'm willing to get back involved, fully, sort of step on the gas pedal, if we're able to turn this into support, right? We're kind of messing around at the level right now. If I stare at the chart too long, which I have been doing the last few hours, I start to see what I think is signs of momentum stalling. We're starting to see that premium come back. If we look across, let's just go to, where did it go? I think I got rid of it. No, here we go. Funding has been neutral to negative leading up to, again, the last, I would say, 24 to 48 hours. It started to really show between the futures and spot basis in a more obvious manner the last day. But we're seeing towards the high, funding start to tick more positive, open interest start to increase along with that. So, as you can imagine, you have an increase in participation. You have, I guess I would say, less to show for it. So price is not moving up with the same sort of impulsiveness as it was leading up to this. So I think it's just a good level to exercise caution, maybe manage the position. For me, it meant taking some off. Again, it's a very easy area for someone also to short, right? Not to say I would short this, okay? Because in this context, I don't think it's a level that I want to short based on the return we had back to it. But, as I've said, we're sort of at a range low, right? It's a muddy area, right? You don't want to say it's kind of a line in the sand, even though 50 is sort of one of those very obvious levels. To where you could say, all right, I see your point. Like if someone is starting to hedge up here and short, sure, because your invalidation is somewhere right above it, honestly. It's not like you have to go too far before you could say, all right, the next target is clearly higher, I'm wrong. So again, this is one of those sort of key contextual levels where rather you could define contextual risk reward because the invalidation is so close. It's just that in terms of downside target, we didn't have an inefficient move up. So it's not like you could say that the move to the downside would pay fast. And if I short, I want it to be a position that pays fast. And I want it to at least have the sort of requisite conditions that I would assume would lead to a fast payment to begin with, which would mean like we're hanging out above a gap. So it's not like we're hanging out above a gap. The entire move that we're looking at right here, it's sort of resulted from double distribution type days that have led to more balanced, very symmetrical days, right? So it's not perfect, but this is a very balanced structure. This is an imbalanced structure. Previously in ranging environments, I would say, in outright ranging environments, even though we're at resistance right now, so obviously trading is always a pickle. I would say, this would maybe be how a top can form right here. And yes, when we grab the highs, or if we have some type of poke and reacceptance back within this range, all right, then I'm starting to look back within this gap. But again, the whole path upward has been sort of these double distribution type extensions, followed by 1-2 balanced days, and then continuation. So I'm going to sort of err on the side of caution here. Again, this just means for me not opening up any kind of short position, but I took some off the table yesterday. Not talking about spot. So I closed out some futures positions that I had open. But very balanced day, again, at resistance. No major sign of failure though. So it's not like, we are in the beginnings of what might be perceived as a grind against resistance. And I don't say it's grinding whatsoever yet now. Lower time frame, you could say that it's consolidating against this level and there's been no major rejection. But if you look at this profile, it's not like we've had any kind of major selling tail. We haven't tapped into a significant supply zone. If you're looking at it currently where we sit in relation to where most of the volume came in, we're kind of flirting with that area. So we're looking at the point of control right here. Price is this green line. I would be more apt to say that this is a more precarious structure if most of our distribution was soaked at the highs and now we're trading below that level. Again, it's been very easy for people to call the sort of interim top of this entire trend up when you have these type of balanced days, and really they've held. So you've had this point of control that has been built towards the base of the structure. As positions have accumulated down towards the lows, and you can think of people that are anticipating a reversal, getting soaked, getting absorbed, and these lows being maintained, rather, where the point of control is, price is maintaining that level. And as you can imagine, if you're sitting above the point of control and that's where the majority of the volume came in during the day, you can make a stronger case for shorts getting caught and longs being in a better position. Or you could just make a better case for longs being in a better position. If we look at today's profile, if we look at today on the lower time frames, and we have a VWAP on there right now, but we'll just put on our multi-day VWAPs. Here's our daily. Here is our weekly. Sorry. What the hell's going on? Come on. Okay. Why is the weekly not showing up? Is the weekly a bad color? Oh no. Oh, it's because the weekly is matching up with the daily. Oh no, it's below us right now. Okay. I'm thinking today's Saturday. It's not the start of the new week. But your point of control is going to be right around on the TPO profile, on the volume profile. It's basically going to share the same position as the VWAP. Don't overthink the VWAP. We're sitting below it now by 50 ticks, whatever. It's just we're not in a position where you could say longs are really offside. The only thing that we could say is they're starting. How do I best put this? We're starting to show signs of heating. Right? It's the best way I could put it. Signs of overheating are when we'll just make it easy for everybody to see, are when your futures markets are trading above your spot markets. Now, the one thing that you have to remind yourself, so here we'll just look at, for example, Bybit's at 903, or 49,003. Coinbase is trading at a $10 discount. That is a negligible difference. That at these high prices, a $10 discount is that's nothing, right? That doesn't mean anything. You can't say, okay, it's trading at a discount. It means that spot is pulling off the pedal. At higher prices, as you can imagine, those increments, they decrease in percentage terms, right? So, I made this example a while ago and people weren't really sure. People didn't understand that there are some newer traders that didn't understand that a $1 spread at $10,000 is much different than a $1 spread at $49,000. So a $10 discount is meaningless, right? That difference it's an infinitesimal small difference compared to what we should be looking for if we're looking at major signs of overheating. But, like I said, when price was moving up yesterday, when we were moving up earlier this morning, we did see somewhere between $75 to $100. So again, positioning, if anything is if that's an indication of anything, it's that the futures market is just starting to get a little bit, again, a little bit more aggressive. One thing to point out though, there's been no major rejection and this thing can persist, right? So if we look at, we'll just look at funding rates, for example, basis, which is a component of funding rate, right? Funding rate is that interest rate component. It's only started to be a little bit more on the positive side rather than be neutral to negative. And if you remember earlier on within the bull market, it was exorbitantly high, okay? It was like, I can't even remember, it was like 8 basis points, 10 basis points and above. You could technically hold on to a long and liquidate a position and theoretically you could, right? I don't know exact amount of time, but if you held on to that position with the funding rate at that high, I think it was like 1% a day you could lose at some of the more extreme points. And that is significant because if you're holding a position and it's under collateralized, right? If you're trading with a lot of leverage and a very small amount of, a very small amount of capital, well, then that's going to eat into your margin, obviously, and it's going to be that much more significant because, again, that's being under collateralized. So, just to recap, higher time frame to get this out of the way. There's not a whole lot you could glean. Price isn't really doing too much to say that we should be that worried. But again, higher time frame resistance. In the long run, it would pay to sell resistances more than it would be to buy them. Just put it that way. But the trend is strong. Okay. Let me just pull the chat up really quick. One sec. All right. Okay. Not for nothing. On the weekend, things are thinner, right? We expect more choppiness. So I guess what isn't happening is a good sign, right? So what isn't happening that normally should be happening is always worth paying attention to. We've had a significant move up every Friday. There's been sort of the Friday ape. Gone into the weekend, and the amount of, I would say, fuckery that we've seen, it's really no better way to put it, is minimal. Okay, and in a thinner environment on the weekend, up until the last couple of weeks, it's always been, weekend action is more or less fade worthy, right? If we're in a downtrend and we have some type of rally on the weekend, it's basically weekend action that's not worth attaching too much weight to, right? It doesn't carry much merit. Whereas now, we've made it to the weekend, and the sell-offs that we've seen this morning have been abrupt, right? We've seen a little bit more, again, of a sign of that kind of sell-off where you have longs that are just in poor position. Leverage longs, right? They're more path-dependent, easier to shake out of position. So you're seeing these, on Bybit this morning, there was a 43 million contract long puked, right? Long puked that market. And we've seen this sort of more aggressive behavior. You get that towards the highs, right? After a sustained move. This is kind of one of the things that makes me a little bit more cautious. Towards the end of a move, when it's so obvious at that point, the trend is like, at this point, how far off the lows. You're getting people that they're acting with a little bit more, I guess, FOMO, right? That's the best way to put it. Hastily getting into positions, not in the best locations, very quickly dumping those positions. So you'll see, a long come into the market, substantial increase in open interest, and they sell like $200 higher after price starts coming back down. And, you're starting to see this very weekend type of behavior with, I would say, size, which is a good indication of, to me, that we're approaching that point where we might have something, and this is just, don't take this seriously, where maybe we do get an extension up to what is like this $53,000 pocket. So let's just put on so here it is. It's right around here. So this low volume node. So maybe we do get this type of extension, but the move is so thin that it's a move like this where we end up having a much larger correction afterward. And again, it's just you have people sort of aping in and panicking very quickly out of position too. Because it looks like, again, we're at sort of that key contextual level where you have a ton of participation come into the market, and crypto traders love to buy breakouts, and they love to create false breakouts, right, and get trapped in a pocket. So that's one thing to consider. Let me just go through the chat before I go down to all the other stuff, because I kind of drowned down about the high time frame and why. I just like to explain why I take some off the table, because I don't think it's a panic. I don't think it's a point where anyone should panic or anything, but it's just how I operate. Okay. What's up? What's up? Spaceman again. Sam. I'm just looking if anyone. Pouncing Penguin. Is contango on the futures curve a sign of overheating? The crypto market is traditionally, it's a market that's in natural state of contango. I would say markets as a whole, their natural state is contango. In crypto, there's really, there's not the same, I guess, structural reasons for an asset to be in contango as there are in traditional markets. That premium that you incur, right, is in traditional markets due to cost to carry, insurance, and actually has real reasons behind it. With crypto, it's a sign of demand, I would say. It's not like it costs money to store BTC. What you can say is, there's a sort of counterparty risk being taken on, but so contango is normal in crypto markets. I would say what you have to do is establish what are norms for contango, right? So are we looking at futures that are trading at 25% premium, or are we looking at futures that are trading at a 10 to 12% premium? And what you can do is, there's a good website to look at all of these. Contango is when your futures are trading at a premium. Okay, so here's a futures term structure. All right, so we'll just show, we'll have Binance. We'll just show FTX, Deribit. Bybit's not really that necessary because their linear futures are pretty new. But this is your term structure. So here's your, index price, your perpetual price, basically same thing. So when a market is in contango, the spot price is trading at a discount to the futures price. Okay, so across the term structure, these different tenors, so September, December, these quarterlies, they're trading higher than the current spot price. What this means is that over time, that price will meet the spot price, which means that price will roll down, right? So you'll have, if that cash and carry trade, right, that a lot of hedge funds are taking advantage of, a lot of more sophisticated traders take advantage of because it's just ridiculously high compared to anything you get in traditional markets. When the futures are trading at a premium, you buy spot, right? Let's say you buy 50K BTC. Let's say the futures are trading at like 65. You sell the futures, you're basically delta neutral, and you're collecting that spread. And it's essentially a risk-free trade, but that's when the market is in more or less hyper contango, when you have those very high premiums and that very steep contango. Backwardation is when your futures are trading below spot. This is more or less, in the crypto market, your term structure is a good indication of sentiment. So bottoms, a hallmark of bottoms, has traditionally been when the term structure is in backwardation. And it hasn't really gotten like that the way that it used to. So if anything, what you have to do is start reestablishing what norms are and what you should expect and what should really set off your alarm bells, which might mean that now, instead of futures trading at a discount, which they might temporarily, like May, the May crash, like March 20 crash, March 2020 crash, these periods might be very short-lived, right? Mispricings for a very brief amount of time. Whereas now, bottoms might be marked by let's say quarterly's trading, the furthest out quarterly's trading at like a 3 to 4% premium rather than trading at a discount. And in traditional markets, you might have that for a host of reasons. One reason might be supply shock in oil, and you have current spot price of oil trading much higher than those further out contracts. And in traditional markets, you have a lot more futures and a lot more across the term structure than you do in crypto, which is like at most a year, right? Okay, so I think we've covered that. I didn't want to go on too much about the high time frame and positioning, but just barely starting to see signs of overheating. Again, I don't think it's worth selling my spot. So put it that way. Next logical area of support, though. I mean, if we're looking at this structure and saying where is the next reasonable area to expect to bounce, we haven't had a retest of this top side of this 47.5 zone. We're very close. So go figure, we're very close. It looks like we've semi-tested the top side of it, but we haven't had any kind of meaningful interaction there. I could see someone buying that dip. But the next major area I would say is between this 44 and sort of 42.5 gap. And that's still, that's an uncovered single print that we've left behind. Not that you have to revisit it, but if we're just going to be looking at the TPO and looking at how these structures have transpired on the way up, what you're looking at down here is just an area where price moved very rapidly through. There was not much two-way trade, and a lot of the times these are good areas to get re-involved, or good areas to rather reassess if prices, makes a concerted effort back to the downside. So let's take a look at what I really want to go into, which are some of the newer pairs that people are talking about. You know what, Sam? One definitely could make an argument for hedging their portfolio at this location, because again, you're so close to a level where you could split, reevaluate, and potentially, reestablish that you wouldn't be paying that much of a premium to do so, right? So as I've said before, sometimes you have to buy higher, right? That's the cost of doing business. And the one thing about newer traders is they want to be in the entire move, so it's very difficult to divorce yourself from that sort of mentality. But hey, if you're hedging here and we're trading back above 50,000 and we've seen a ton of volume come in and price is clearly showing that it's found its footing above 50K, well then it's a very simple concept to me. If we re-accept within gaps, if we re-accept within ranges, I expect to, if we re-accept within a gap, that was the reasoning behind 40K up to this level. If we re-accept back within a range, a lot of the times I'm going to be looking at the mid, the point of control, and then the high. So it's just a matter of price getting back into an area where it was very comfortable before. And that point of control, I think, is like 57, 58. So if we reestablish above 50 and it doesn't occur by us doing one of these, right? So let's say we blast up to 53. And we're trading back down at this low or where we currently are. I would need to see price establish some type of strength above 50K. It's all very nuanced at that point, right? What kind of absorption do we have up here? Are we seeing that the futures are getting very, at this point, long in the tooth, and they've been trading at a premium now for some time? And I'm just talking hypothetically, let's say we're another 2 days into it, a day into it. Then it would obviously it would be very nuanced, right? To determine whether or not this is the, the same buying opportunity as I'm talking about when I say if we re-accept within here, we're looking back up to the point of control in these highs. But if we re-accept above 50, right, we don't see any kind of major rejection, price sort of lose the bid. Then the next area for me would be, and you can see that high, I don't have to put on the fixed range, but just to sort of make it a little bit sharper, price would probably move pretty freely up to this level. Now, price moves pretty freely through previously inefficient moves. So this move right here was pretty inefficient, right? It was, it was a one-way trip. There are gaps that you'll hear about, CME gaps, weekend gaps, overnight gaps. This is more or less a gap to the downside, right? On the daily structure. I mean, if we look back at it on the 4 hour, same thing. It's kind of uninterrupted from the lows around 53.5, all the way down to 49.7, 50,000 area. So what you're looking at is an area where, again, there was not much resistance on the way down. And the idea is if we re-accept above that level again, you're more than likely to pass through with sort of the same level of intensity as you did on the way down. So on the way back up, if we re-accept, and I guess to refine the level, if we re-accept above these highs, so around 51.5, 51.6, it's probably a pretty fast move up to 54.5, 54.7 area. But we'll cross that road when we get there, obviously. All right, so let's take a look at, so right now there is a little bit of a shift, right? Avalanche is gaining a lot of traction. Okay, I've gotten into Stake DAO, I've gotten into Pangolin, I am in, what's it called? Can't even think of the name right now. Let's go to the dashboard because it's actually a really useful dashboard. Where are we? Here we go. Benki, but I had something up that was good. I will share it. Reach out to me on Twitter if you're interested. Oh, here it is. Okay. This whole ecosystem is getting a lot of love, right? And this rotation is taking place a couple times in the market, right? When you're talking about initially Uniswap, then SushiSwap, Solana ecosystem, and now it's Avalanche. The thing about Avalanche is it's not as accessible, right? So I think this is a good thing because being that it's not as accessible, I don't think it allows money to move in as quickly, which means I don't think that we've seen the, I guess, full extent of FOMO yet into this rotation. So for example, like if I want to, and KuCoin offers some of these pairs, right? Which is great. It's one exchange, right? It's one exchange that people are familiar with. It's not like they're listed on FTX, on Binance, on Phemex, on Coinbase, really nothing, right? Okay, and KuCoin is pretty good for some of these lower market cap gems, which, people complain about, oh, you're talking about something that's a 20 million market cap. Okay, I'm telling you that it's risky, but a month from now, it could be a $500 million market cap. And then, did you miss out on that 10, 20x? So the thing about it is not as accessible, right? So for example, for those of you that use MetaMask, you could go through the AVAX bridge, and it takes a little time, right? It's not immediate, okay? And then if you go through the AVAX bridge, it's not difficult. So I'm not going to go through connecting it because I'm not going to dox one of my accounts. But you go through the AVAX bridge, and then you could use an exchange like Pangolin. So I've taken a position in Pangolin. It's essentially the Uniswap of AVAX. I don't care when I get into positions if that's true, right? I don't care if, let me just let's see if we have any of these charts up. Here's Pangolin, right? I don't care if it actually ends up 6 months from now turning out to be, it was the next Uniswap, everyone's migrated over. What I care about is initially that narrative has an anchor, okay, and enough heads that they're willing to hit the long button, all right? As long as people believe that, that's all I care about. I only care about, I am not an FA guy, right? I am good though in noticing reflexivity, okay? And it's not something that you should have too much trouble identifying. Again, the middle of the bell curve is what suffers during these times because you have the far left, which just, are aping into everything. Then you have the far right, which know everything, okay? And they sort of know everything before it's unfolding. But it's not that difficult, right? People think that it's the next Uniswap. There is sort of this sector rotation. It's the beginning of it. The charts look like this. For me, these are things that I'm willing to tag on a position, maybe not at the most favorable price, to just establish a meaningful position at the outset, buy on the first big dip. But I think that this is something that takes place over the next couple of months, 2 to 3 months. So, technical couple, but who knows? Maybe it's 2 to 3 months. Maybe it's 2 to 4 months. But I definitely think that we're going to see this shift. So I've gotten into Stake DAO, which is a great platform. I've gotten into Pangolin. I've gotten into Benki. Now, what you should be doing is, to some degree, having some amount of, and I don't even want to call it sophistication to your process when it comes to getting involved with, and this again, not advice, but looking at these protocols and crypto tokens and coins in sort of roughly the same way that someone smarter would. All right. One of the ways that we can look at these projects, right, through the lens of a more fundamental analysis or fundamental approach, is to look at total value lockup, right? TVL. Okay. So this is where this platform is useful, and I couldn't find it a second ago. And if you want me to share this, I'll go ahead and paste it in the chat. This is the AVAX ecosystem. All right. So what we're looking at, and we'll just go to the applications, Benki and Pangolin. All right. These are leaders by total value lockup. Okay. As opposed to, you're going to have some of your punts. I might throw a little bit of money in something that has a $2 to $5 million market cap. Okay. Yeah, it could go to zero. It could have that day, but I'm throwing a small amount of money into that on the off chance that it 2-3x's. And it's not difficult for that to happen because you just blow at these low market coins and they go up. But the things that are probably garnering the best interest, or I guess the most informed interest, are showing you one piece of evidence that indicates that, I think, through the TVL. Okay, so this is a good platform to use. And again, I don't know a whole lot about the Avalanche ecosystem. I'm not going to sit here and drown on like I do. But it's just, I'm starting to dip my toes in this. And I definitely am starting to see sort of the same behavior that we saw. I remember what Uniswap was like because I missed out on the very beginning of Uniswap. There were things that I longed and I traded and I should have held and just forgot. All right. Didn't make the mistake with Sushi. All right. Didn't make the mistake with Solana. Okay. Obviously, I was in and out of those positions. But I think this is, the one thing I'm going to create my own personal experiment on, to where, and honestly, one of the more helpful aspects of the bridge and this sort of disconnect between, I guess, getting in and out of positions quickly into more comfortable assets for me. The friction in that process, if anything, is helpful for holding, which might sound, ridiculous, but it's true, right? I personally am less inclined to sell things if if let's say, for example, I have something that I can observe an order book on and something that I can't. Just off of those two things alone, I'm probably less inclined to sell the thing that is on my MetaMask and I don't have a current gauge of what liquidity is. And maybe I could look it up very quickly, but the steps that it takes, even the seconds that it takes, are usually things enough for me that are friction to hold a little bit longer. And that might sound ridiculous, but hey, what works, works. All right, so let's just go over some charts. I mean, AVAX, not for nothing, same kind of chart as Luna, right? If we look at AVAX, and I apologize, guys, if this stream is kind of a rusty stream. I feel like I haven't streamed in a week now. Owning a new home, it sounds good, right? For anyone who has bought it, and I'm talking about you buy a new home, right, where everything is newly built and all of that. You still have a ton of shit to do. Or rather, not owning a new home gives you a lot of things to do, but a wife gives you a lot of things to do. So I haven't been streaming, and I apologize for that. So I'm definitely rusty. But if we look at Luna, if we look at AVAX, and all too often in crypto, patterns tend to play out and follow each other, especially when the market is moving up and we're sort of in a rising tide moment, because it's self-fulfilling, right? You have people that are looking at Luna. We have this very sharp drop off, this V sort of U reversal, reaccepted into this inefficient candle to the downside, right? That weekly candle just pretty much, what is it? It wasn't, 4 or 5 days, but a sharp move down, right? You get the idea. Reaccepted back within that more or less gap, and now reaccepted back above the range that we broke down from. You have a chart that looks very similar to that. You're going to get people that are buying it based on that alone. And I know that sounds that is the reason why the crypto market is so fruitful, and it's because you have sort of that level of anti-sophisticated thinking. And not to say that it's bad because it works, but the point is that's clearly not something that you would, you wouldn't go look at how Tesla recovered a sell-off and then look at a stock that's in, let's say, you're looking at Tesla and then you see a stock that's in utilities and it has the same kind of sell-off, and then you're thinking, let me just buy this because Tesla recovered this way. In crypto, that works for some reason, right? And we know why it is, because it's a very technically driven market. A lot of eyes on charts sort of reinforcing that movement. But I mean, AVAX, we're off of the lows, right? 4x, okay, 400%, excuse me. We're off of the lows, 400%. We're back above a range high. Do I want to be buying this right here? Not necessarily, but, and this all is going to be a question also where we are within this little micro cycle. I mean, could you justify a position and starting to build a position here because of the recovery? Yeah, absolutely. Is it the best area to start doing that? Probably not. So what I'm doing is just off of the lows, a very simple fib tool. I want to be alerted whenever we're back below sort of that 38 level. If we get back there, if we start reestablishing structure above this range, well, then I'm shit out of luck, right? But as far as adding more to the position, I can't add more to the position right here. The chart looks very bullish, but again, it's just, I don't know. Maybe that's my issue because I know other people would just ape in, add more to the position right there. CRV is kind of shit right now. So this is the pair that has the highest TVL currently. All right. The trouble with this is a vertical chart from the get-go. This is yes, I'm using the ribbon suite. When the markets are trending, I will a lot of the times tag on either a 20-period moving average or a Hull 55. So for anyone who's been following, you guys know that I've always been a fan of the 20-period. A moving average is very useful whenever, let me get rid of this person spamming the chat. Moving average is very useful in showing you sort of who is in control. So that 20-period is good. 55 Hull is very good. These are good on 31, 4-hour, higher time frames. Those are not high time frames, but I think you get the point. I'm not really looking at on the low time frames. It doesn't influence my my scalping. I like Benki, right? I have a position in this. The trouble is the chart is pretty much just up only. So at some point, you're going to have to imagine that these pairs are going to have a substantial sell-off. Like, nothing escapes that fate. There's nothing new under the sun. I talked a long time ago, I talked about Ray, right? And one of the things I was talking about with Ray was sort of my hesitation in getting overly involved, right? I got long here on the break above these range highs, all right? But I very quickly was getting in and out of these positions because what I said was, SRM, Sol, all of the new pairs, so all pairs that, first time list, move up hard, they have their sort of, their culling, right? Where there's a prolonged period of selling and sort of a reaccumulation phase. Nothing escapes that. If it hasn't happened now, it will happen. That's my point. So I think with these newer pairs, that is something worth considering. And with this one especially, just from the outset, again, it's strong right now, but this is one thing because of the amount of interest that it's gained. I'm willing to sort of hold through a dump, right? So again, I don't want to micromanage these because I micromanaged Uniswap pairs in the beginning, or Uniswap in particular. Like I said, I was trading things like SNX. I was trading things like Aave. And I traded them too much, and I should have just held, right? I should have just more or less forgot about them because although a big dump came, now we're 10x, we're 20x. Let's just go through, where'd that go? All right. And then here we have Avalanche. This is one of Avalanche's launch pads. Again, brief accumulation period, strong move to the upside, right? I want to be buying, I just got rid of that, didn't mean to do that. I want to be buying dips on this, right? At least initially. The thing about, so when I'm saying, okay, so we've had a significant move to the upside, I want to buy the first dip to that meaningful support zone based on structure or based on fibs. All right. If we don't have any structure nearby and we've had an extended move off of anything that's reminiscent of structure, a lot of the times I'm going to be looking at sort of that pocket between the 382 and the 618. If we're in a price discovery where we don't have any reference point, if we don't have a nearby moving average, you have to sort of lean on something that other people might be leaning on, because that's where you're going to most likely expect people to get involved, right? So in a technically driven market, a thin asset like this, you're going to see more often than not a bounce at these fibs. That being said, there is no reason to assume this would escape sort of the same fate. So what I mean by that is I want to participate in, let's say this is the pullback and we get a pullback back down to 250, down to these lows even, right? So if we had a very significant pullback, who knows if we get that in the near future. I want to be in the next move, but make no mistake, I don't think that, again, this escapes without coming all the way back down and going through another reaccumulation phase. Now, why is that? New pairs have people that have been in them before you've even had a chance to buy, right? So, pre-sales, seed investors, all of that. If you're in a pre-sale, myself, right, your cost basis, if I am, in a pre-sale, my cost basis is so high at that point that it doesn't hurt to sell, right? So if you're already 100x up, then it doesn't matter if you sell here, and it also doesn't matter if you sell down here. It also probably doesn't matter if you sell down there, which is why you have in these new pairs, you actually at some point will have this sort of prolonged period of selling, reaccumulation, because there's people that can just sell indiscriminately. So that's something always to be mindful of. And that's why you should look into, the amount that is outstanding, right? That has, been given away essentially to early investors, seed investors, pre-sales, et cetera, because you want to know sort of what amount of supply could potentially come into the market that is not price sensitive at all. All right. Stake DAO, I think I went over this chart earlier. Again, this is related to the Avalanche ecosystem. You could get this right through ETH. These are all, guys, make no mistake, these are risky plays. Stake DAO, I think, is like a $28 million market cap. Let's look at that. STD I typed. Whoops. $31 million market cap. But TVL is 129. So, it's 4x, 5x that. Okay, so it's not like it's a complete shitcoin. All right, let me just go through the chat real quick because this is not exactly a stream where I'm going over lower time frames. I'm kind of just touching BTC high time frame, going over some of these pairs. So if you guys have any questions. If I take like a week off of streaming, it's like I forget how to stream. I forget a format. I forget what I want to talk about. I just come on here and bullshit. Let's go back through. So Sam, gaps, I mean, there's multiple types of gaps. The gaps I was referring to are, they're gaps, the gaps that I'm referring to that are really applicable when I say if you re-accept within them, you're probably going to cover them pretty quickly, right? Are gaps that are liquidity gaps, right? A lot of the times they're the result of liquidation. So, stops being run, liquidations, price moves very quickly through an area, really no two-way trade. If you were to look at a footprint chart, for example, let's see if we have, let's just go to like a 5-minute chart, and I don't know if we have any nearby. A lot of the times in a gap, so this is gapping its way up. It's not like the bid followed up at all right here. You have these zero prints, right? Sort of a volume pocket or vacuum. Gaps to the downside that are either liquidations or stops being run. where liquidity is pulled, right? Market makers pull bids, pull asks, depending on direction. Nothing gets in the way of price, right? Price never goes bid, price never gets offered. Those are the gaps I'm talking about, right? Where there's no real two-way trade. It's just one way, right? Again, that's why, liquidation structure is a good example. So those are the levels that I'm talking about when I say gaps where you reaccept back within them and move pretty quickly. There's a couple reasons for that. So for one, if you're moving through if you have a ton of liquidations, right? So let's say we have a ton of liquidations, the longs get liquidated, longs get stopped out, right? Draw it real quick. Price is ranging. Okay, is a ton of stops below these lows. Get a bunch of longs, right? So let's just draw sort of what happens a lot of the times. Here's a range. What happens on both sides of this range? Oh shit, I didn't, good call, I didn't change the screen. All right. So when I was talking about a gap earlier, I was just talking about, when I was talking about zero prints, this is what we're looking at back down here. There's not enough of them really right here, but this is what I was referring to. So price never going bid right here, moving quickly. That's not the best example, but liquidation structures are a really good example. What I was just going to draw though was this. So you have a structure. Let's just talk about what happens. So here's a range that forms, right? On both sides of this range, what do you have? You have buy stops up here, BS. You have sell stops, okay? Now you have buy stops that are for your shorts covering and longs opening up. So for old business closing out and new business opening, all right? You have sell stops for longs closing out, so old business closing, and new business opening for shorts to be opened, right? So some type of breakout to the downside, to the upside would be for the positions to open, okay? And closing out, when I say old business, I just mean if you're long, your long stop is being hit, it's closing your position out, okay? When a range moves sideways long enough, you accumulate a lot of these, all right? So that's why you'll have these sort of liquidity probes, sharp reversals, et cetera, et cetera. I don't mean to say et cetera, I just don't feel like going into too much detail. So highs and lows, whenever, let's say for example, price breaks to the upside and triggers the buy stops. Okay, so shorts are closed out, right? Shorts closed out, longs enter in, okay? If it's an OCO order, a lot of the times what you'll have is longs open up here. Whether it's manually done or it's connected, you'll have sell stops placed somewhere within here. And you still have those sell stops down here. All right, so if price reaccepts back within here, you hit sell stops here, market gaps down. Right? This is what your classic fake out reversal is. All right, price breaks to the upside, you get a ton of longs that add into the market, right? Shorts close out. New long stops are in place. New selling pressure is in place because you have those longs in. You still have those selling stops down here. Those stops for longs that were already open and that are already committed. And you have those breakout sellers that are still down here as well. So as price reaccepts in the range after breaking to the upside, it becomes very easy to move back down to the downside if you don't have a supportive spot bid. So after gapping down, right, after having some type of liquidation structure, some type of stop run, you removed future sellers out of the market, right? So on the way down, the move is inefficient, it's one-sided, but you've also removed future sellers. So when you take sellers off of the table, okay, there's less sellers to impose their will on the way back up, right? So after a liquidation structure, what you'll see is it only takes a little bit of volume to move price back up in the opposite direction, and that's because you've just taken sellers out of the market. That's why I say when any long is a future seller. Any seller is a future buyer. So when you have a gap that occurs because of a liquidation or some type of stop run and price continues in that direction, when you reaccept back within that gap, a lot of the times there's just less friction. It's the best way I could put it. And I made a entire sort sort of module on this in Blockroot where I cover it in a lot more detail. But that's basically the gist of it, right? After a stop run, you've just taken sellers out of the market. It's easier to move back up. After a stop run to the upside, it's the opposite case, right? So stop run for longs, it's easier to move back up. Stop run for shorts, it's easier to move back down. Some more questions. So feel free to ask questions, guys. I don't know how long we're going to go for. It's like an hour into this. You guys still there? So just to give you a little bit of insight into what you should start sticking your nose in, that's why there are great trades to be taken after a ton of liquidations occur. And what you have to do is obviously get a feel for the amount of liquidations we're talking about. But again, it's the same concept as building or establishing norms. What you'll have is a very, tremendous amount of liquidations come into the market. And then, a lot of the times what you'll see is price rips down, right? You get a big liquidation structure. This occurs on, and in Silico's gone over this before. This occurs on high volume, right? So this occurs on high volume. You start bouncing. You have a big candle to the upside that starts forming on very low volume, all right? And the reason is there's no friction at that point, right? Less work is able to move price, okay? And it's an indication there's not any absorption taking place above you. So no friction, no absorption. It just means that it's going to be very easy to move in that direction. Oh, I just fucking moved the screen again. What I was talking about was this. You have a big candle, right? A liquidation structure. And then the candle that follows after we start bouncing is a big candle, but a very small amount of volume is taken, has been required. Excuse me, shit. It's been a very small amount of volume that's created the candle. Right? So again, the same concept of not much work required or getting a lot of results from not as much effort. No, I think that people are buying ADA the same reason, why did I buy ADA, right? Well, because apparently they're going to have, a release in September, right? They're, smart contracts, all of that. So their whole ecosystem is finally, who knows? I don't want to, because ADA, I think they've kind of like had announcements before. So, but there's a catalyst that is causing people to buy in anticipation of something being released. And without even going into detail, just in simplest terms, people are buying the rumor and ultimately they'll probably sell the news. So I don't know anything about ADA because ADA to me has always been a kind of a shitcoin that didn't really have any kind of value to it. But we'll see. But I mean, if you look at ADA now, it's kind of reminiscent of where we were back here so far. So the one thing that's good about that we're seeing right now is that there's not really flows in some assets as a result of flows leaving other assets. So we're not seeing this sort of shuffling. I mean, you are seeing a shuffling in rotations between sectors. So for example, ecosystems. But what you're not seeing is like alts go up, BTC go down, alts go down. You're seeing kind of this healthy appreciation across the board. So BTC going up, alts going up as well. I think that this is a good sign of strength in the market because, if anything, what it implies, and it used to be more important when there were not many stable coins and options for alts, because you had to go into BTC to get sort of flee to safety, flee to quality. If anything, being that alts are still looking great, moving up, ton of capital in them, I don't think Bitcoin can drop as much as it could if it was sitting in a poor position and money had already cycled out of alts. So it's sort of like the alts might provide the capital to dampen any move to the downside, because if you get any move downward by BTC, you'll probably see money come out of alts, obviously go into stable coins, but also go into Bitcoin. So I think that it's, again, another sign of strength in the market. I mean, you had the Binance KYC news yesterday, market moved up. This is a very strong market right now. So I definitely don't want to give any impression. Again, that's why I kind of drowned on about why I TP'd some of my positions. Because I'm not taking profit here thinking that we're going to get a big reversal or that this is done. I just, for me, and someone asked me in a DM yesterday, so can you just tell me what your thought process is, behind taking profits? And honestly, part of me said, one of the things I said was, hey, this is a force of habit, and sometimes it hurts me, right? Sometimes I take profit at a resistance that maybe is a resistance that I should just hold through. But like I said, that's why I tried to repeat in the beginning, doing this more than doing the opposite is going to pay me in the long run. So taking profit at resistance, even if I did it every time, while I might miss out on another leg, I think in the long run it's just a better habit to build on. So single prints are basically a gap too, right? But the thing about single prints is, a single print is an area where you have only one column of TPOs, all right? This is a single print right here, all right? There's sometimes when people interchangeably, and I've done it before too, talk about single prints if you have a selling tail or a buying tail. So if you have one row to the high and to the low, that's if you're just using to describe, like if I'm trying to get someone's attention to an area and I'll say, oh, the single prints at the high, it's just really just trying to draw your eye there. Single prints technically are an area where there's only one column between the high and the low, right? So you have a double distribution structure like this, and you have single prints right here. Now, this is one 30-minute rotation. It doesn't mean that we spent 30 minutes right there, right? The TPO doesn't tell you how much time you spent in any one particular area. It's just showing you essentially it's 30-minute candles of the day. But this is only where we've had, we've had a very limited amount of time in this area, right? The least amount of time within this entire structure. So the single print is just where you just have one of these columns. And a lot of the times, again, when this is a gap, right? So price moved very quickly through there. It was an area where, no value was established. Price did not favor that level. When you're looking at TPO, you're looking at where price is accepted, where it's rejected. It was accepted through this level very quickly. It spent no time there. If you come back down to this level, so when you have a single print, if you're in a trending market, for example, because it's not always like, oh, if you have a single print, you should buy it, right? Sometimes you want to sell because reaccepting into single prints, if it's a large enough gap, it's a good opportunity to, if you have a gap, let's say in a double distribution, you reaccept into that distribution. A lot of times you can move pretty quickly through there. I've went over that. It's the same concept, right? It's a gap. But if you're in a trending market, you have a little bit of nuance to apply, right? Current context is market is trending, value is being established higher, value is migrating upward, where volume is coming in, price is continuously trading above that level, signs of absorption and soak at the lows, yada, yada, yada. Okay. That being said, if we have a structure on the way up, we have a trending day type like this, and we have a single print. The single print is an area where I'm probably going to be looking to get involved to buy or add, right? So, for example, just make a very basic double distribution structure. Market was trending. Okay, this is what this looks like. Okay, so this is the single print beginning. Let's say that the market moves up, breaks down. Where would I look to get involved on this chart? Definitely here, right? And I don't want to say definitely because who knows, right? Maybe we arrive to that differently. Or no, as you can imagine, you could arrive to that level in different states. So that being said, though, this is something that I would probably favor to buy, right? If you have a strong trend upward, this gap where it begins, a lot of the time that's a good area to get involved, right? If you're looking to add, if you're looking to be, to enter, for trend continuation. And it's just where, if you're looking at market structure, it's probably where those supports are, right? Because when you're looking at a TPO, you're just collapsing the day into a distribution. So if I, open these TPOs, if I expand this, that's all it is, right? Expand this, we'll connect these two. What we'll do is, hold on, see? Right? If you collapsed both of these days, right, to the left, it's a horrible, I have an arrow button. Hold on one sec. There we go. If you're collapsing that, where price accumulated over time, rather where presence was, if you collapse it upon itself, it's going to have a more substantial distribution than if price moved very quickly through an area and never sort of interacted with that area again. So that's your single print right there. Or actually, your single print is right here because that is the only period where the 30-minute candle had not interacted with another 30-minute candle, high or low, right? So now you'll see if I put the TPO back on, that's that single print right there. So the thing about TPO is you're never just looking at it and saying, okay, we have an anomaly here, we have a single print here, we have a poor high here. It means you have, it's a must do this. A single print is a must buy. Sometimes a single print's a sell, right? If we're returning back to a single print from the upside, let's say, let's imagine a structure that you would sell a single print, right? Maybe you've had, let's just say you've had 1-2 really strong trending days up, right? So we'll draw them. So you had trending day, balance, something like that, trending day, right? Something like that. And then you've had the first signs of value overlap. So here's value, value, value. So now let's say we're 1 day in, value overlap. So value area, value area. Okay, and then we, for example, have a gap up. This is a fucking horrible drawing. Let's imagine at the high, I forgot about the fucking double distribution, excuse me. Let's say that we have a double distribution, okay. In what context would I say this be more appropriate to sell? All right, so we've had an effort above prior day's highs, a ton of soak there, price is trading back to the low, right? Maybe at the highs, we've had funding going positive. We've seen futures getting much more aggressive. Maybe we've taken this high and we've left behind a tail, right? So a selling tail. So we've grabbed the highs. Now we're trading below where most of the volume came in. Most of the volume came in here. VWAP is above there. Price is currently at the lows. We're kind of consolidating against a single print. Maybe this would be a good breakdown to sell, right? Expecting price to move very quickly through that gap. So, sorry about that drawing. I don't know why sometimes I think I could draw diagrams because I definitely think of the diagram in my head and then draw it unlike what I'm thinking at all. And then I sort of take for granted or expect people to know what I'm thinking. But, so you could tell when I have streams where I am rusty because my streams where I'm good, I have good drawings. So a very balanced day today. But again, we haven't had, even though this is not a single print worth selling. So put it that way, right? If we revisited this area again, so if we revisited 48, I'd probably buy that. So just talking lower time frame positions. All right, guys, we're like an hour and a half into this. I'm probably going to wrap it up. I have to start streaming more frequently again, because otherwise, if I only stream once a week, like I come on here, start rambling, don't have a agenda or have an agenda and completely lose it, carry on about one thing for a half hour, forget the other things. So yeah, one thing I was thinking of doing. So balanced day with low kurtosis. Yes, that's great. Good word, kurtosis. One thing that I was thinking of doing was, and I have to settle in completely because sod's finished, looks awesome. Fucking fence guys today, so it's like something every day. Interior designer. So here's, and entertain my first world complaints. So we moved. We brought some of our old furniture, okay? But we also gave some of it away because my brother and sister moved within the same month that I moved. So we gave stuff away because we hired a designer who's my wife's friend. And she was supposed to start earlier, but that got put off, which means the furniture that we're trying to buy is put off too. And then there are things like you can't get, like, hear my complaints because they're pathetic. You can't get screens for a house like that, right? You can't get a couch like this. You want a nice couch? Good. Wait 4 or 5 months. So there's been like something to do every day. And like I said, new house, brand new everything, right? I mean, like new interior, new, everything is, beautiful. But it's like something to do every day. So I haven't been able to get into a routine. And, I joke around on Twitter about getting into a routine and everyone's like, yeah, you'll never get into a routine. I've been through this before, but, obviously I haven't been through this post-COVID, supply chains fucked up, current environment that we're in right now. So one thing that I want to do whenever I have more time is, don't laugh at me, I kind of want to start vlogging. All right. Now hear me out. I sometimes hate doing streams. All right. I hate the whole I like doing streams, but I hate the formality of setting a time, having an agenda. I would rather have a camera, this is weird. A camera on while I trade, from when I wake up, and not do this every day, but maybe wake up, document in video, right? Create some type of YouTube for this where I go through morning routine, and I'm talking wake up, coffee, all that shit, pre-market stuff, looking over charts, thoughts throughout the day, right? Throughout a trading session. And then obviously I would have to edit this, or maybe I would hire an editor and then start putting out this series, because I think it'd be better than okay, let's show up at 4 o'clock and do a stream. I see the LOL. So I don't know, it's an idea. And I don't think anyone else in crypto Twitter does it. Vlogs, you'll see that some stock traders do it, some absolute LARPers do it, but I don't think you see anyone in crypto Twitter doing it. So it's probably a first. And yeah, but they don't really vlog. They don't follow, you don't follow their, I mean, not for nothing, I'd be taking you guys around in my life. Vlogging, not just streaming. So I already bought stuff for this. So I'm already kind of committing to it. I bought a camera setup. I bought a thing for check this out. I bought a thing for my car. I'm rolling my own eyes. A thing to put my phone on. I just want to create different content. Just put it that way. I want to create different content. Fucking doing the same live streams like everybody else just seems kind of, I don't know, drab. So anyway, I figured I would let you guys know that. I'm definitely going to do it. So I don't know why I acted like I'm thinking about doing it. I'm definitely going to do it because I bought the shit for it. So yeah, it'd just be a matter of time about when and where. All right. And that does it. Yeah, hope you guys have a great weekend. We have a we have a hurricane coming. So in New York, we have a hurricane coming, and that should be fun because it's the first hurricane to hit the. I got a standing desk and I used it for the first time this week. We got and this thing is awesome. It's the first time a hurricane is going to hit the shore as a hurricane rather than Sandy. It was a hurricane offshore and then it was still horrible. So it should be a lot of fun. Gas stations were, packed, but people panic. People absolutely panic. Anyway, guys, I got to get out of here. I'm going to keep talking. Everyone have a great weekend. Stay safe. All right. Till next time.